Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2016 Part C. This question is from Alteration of Share Capital and Internal Reconstruction chapter. Let me read the question. The following a series of losses, GRT Company Limited resolved to reduce its capital to 50,000 fully paid rupees 5 shares and to eliminate securities premium account. The company's balance sheet period to implementation of the scheme was in liabilities side. Under the liabilities, share capital 50,000 fully paid shares of rupees 10 each. The amount is rupees 5 lakhs. Securities premium account rupees 50,000. Creditors rupees 62,000. Bank overdraft rupees 73,000. The total liabilities are 6 lakhs 85,000. In the asset side, under the assets, goodwill, the amount is rupees 1 lakh. Land and buildings rupees 1 lakh 62,000. Plant and machinery rupees 2 lakhs 7,000. Stock rupees 92,000. Debtors rupees 74,000. Profit and loss account rupees 50,000. The total assets are rupees 6 lakhs 85,000. It was resolved to apply the sum available under the scheme. The first one, to write off the goodwill account, and the second, to write off the debit balance of the profit and loss account, and the third one, to reduce the book value of the assets by the following accounts or amounts: land and buildings rupees 42,000, plant and machinery rupees 67,000, stock rupees 33,600. And the fourth point, to provide a bad debts reserve of 10% of the book value of debtors. Show the journal entries to give effect to the scheme and prepare the revised balance sheet after its implementation. Based on this information, we are going to prepare the journal entries of GRT Company Limited. The first journal entry, share capital account data, the old value, 50,000 multiply with 10, the amount is rupees 5 lakhs, which we have to mention in the debit side. And to share capital account new, this is the adjustment value. There is no any changes in the number of share capital. So 50,000 multiply with 5, the amount is rupees 2 lakhs 50,000, which we have to mention in the credit side. And to capital reduction, the difference value is in the credit side is 2 lakhs 50,000, that is called the capital reduction value. It means 5 lakhs minus 2 lakhs 50,000. In narration, being the company has reduced its shares price from rupees 10 into rupees 5 and found capital reduction. And the second journal entry, securities premium account data 50,000 to capital reduction account rupees 50,000, which we have to mention in the credit side. In narration, being the company has eliminated its securities premium account and found capital reduction. And the third journal entry, capital reduction account data 2 lakhs 50,000 plus 50,000, the total capital reduction amount is rupees 3 lakhs, which we have already calculated. And to goodwill account written off, which we have to mention in the credit side, that amount is rupees 1 lakhs. And to profit and loss account in the asset side, the amount is rupees 50,000. And to land and building account depreciation value, it means the adjustment value, the amount is rupees 42,000. To land and building account depreciation, the amount is rupees 42,000. It is also from the adjustment. To plant and machinery account depreciation, the amount is rupees 67,000. That is also from the adjustment. And to profit and loss account in the adjust side, I have already explained it. And to stock account, it means a reduction. So the company has reduced the stock value. The reduction value is 33,600, which we have to mention in the credit side. And to provision for bad debts account provided rupees 7,400, which is also from the adjustment. And in narration, being the company has written off its goodwill and adjusted its land and buildings, plant and machinery depreciation value, as well the stock reduction value and provision for bad debts value. These are the amounts are adjusted with the total capital reduction account. After adjusting this amount with the capital reduction amount, there is no any left value. So that is why the account has been closed. Then we are going to find out the notes to account value for preparing the balance sheet. First, the note number 1 is share capital. Under the share capital, issued and paid up capital, and new 50,000 multiply with 5. The total value is 2,50,000. And note number 2 is trade payable. Under the trade payable, we have to mention creditors. The amount is rupees 62,000. And note number 3 is short-term borrowings. Under the short-term borrowings, we have to mention the bank overdraft. That value is 73,000. And note number 4 is tangible assets. Under the tangible assets, we have to mention land and building. The value is 1,62,000 less depreciation value. The amount is rupees 42,000. We have to less that amount with the 1,62,000. So 1,62,000 minus 42,000. We get the left value of land and building is 1,20,000. And the plant and machinery value is 2,07,000 less depreciation. The depreciation value of plant and machinery is 67,000. So that amount will be less with the 2,07,000. It means 2,07,000 minus 67,000. We get the left value of land and plant and machinery is 1,40,000. So the total tangible assets are 2,60,000. It means 1,20,000 plus 1,40,000. And note number 5 is trade payable. Under the trade payable, we have to mention debtors. The value is 74,000 less bad debts provision. The amount is rupees 7,400. That amount will be less with the above. So 74,000 minus 7,400, we get 66,600. That is a total trade receivable amount. And then we are going to prepare the balance sheet of GRT Company Limited as on the date of 31st. No date, specific date in this question, and in bracket and reduced. So in particular column, we have to mention equity and liabilities. Under the equity and liabilities, we have to mention shareholders fund. Under the shareholders funds, we have to mention share capital. That is note number 1's heading, and number 1 will be mentioned in the note number column. The note number 1 total is 2,50,000. We have to mention in the rupees column. And non-current liabilities are no value. That is nil. And the current liabilities, under the current liabilities, we have to mention trade payable. That is note number second's heading, and 2 will be mentioned in the note number column. And the note number 2 total is 62,000, which we have to mention in the rupees column. And the short-term borrowings is note number 3's heading. So number 3 will be mentioned in the note number column. Note number 3's total is 73,000. So the total equity and liabilities are 3,85,000. It means 2,50,000 plus 62,000 plus 73,000. And the second Roman letter is assets. Under the assets we have to mention non-current assets. Under the non-current assets we have to mention tangible assets. That is note number 4th heading, and number 4 will be mentioned in the note number column, and note number 4th total is 2,60,000. And we have to mention current assets. Under the current assets we have to mention the stock value, and the stock value, the actual stock value is 92,000, and the stock reduction value is 33,600. So 92,000 minus 33,600, the left value of stock is 58,400. And the trade receivable, that is note number 5th heading, and number 5 will be mentioned in the note number column, and note number 5th total is 66,600. So the total value is 3,85,000. That is total assets value. That's all.